Welcome back. Mike Max for Chad Hartman, News Radio 830 WCCO. Steve Thompson in for me tonight. Jordana Green got a big show planned as well. Scientific American writer explains new theories on dementia as we continue to try to make progress on curbing that horrible affliction. Coming up at 1:20, you heard the 4 finalists for the most patriotic song. We did that through our preliminary contest. Now we allow you to vote on each of the 4. Text us at 81807 and give us your vote for what is the most patriotic or what one speaks to you the most, moves you the most this time of year on the 4th of July. Larry Calavegas from Haven Financial Group. 365 days a year we talk finances here and beyond, especially lately is what's going on an international scope. Larry, thank you for joining us today.
Good afternoon, Mike.
You know, it struck me, I was this morning, I was listening to the radio, in fact, and they were talking about the market shut down for the 4th of July, and you're saying, yeah, of course it is. But then they made note, well, yeah, but it's an international market. We forget that it's an international game, and the 4th of July means nothing. And so then I started to think, well, are there brokers throughout this country that have to go in on a day like today? Are we that vested in the international market that this would not be an off day for them because we've become so global in our financials?
Well, it's very true, Mike. The market doesn't ever really stop. It may be often domestically here, but worldwide it keeps on going, and no more than the news this past week with Britain for sure.
Yeah, and obviously that's going to linger for a while. It's strengthened our dollar, I know, but is that good for us or is it bad overall because we've become so fragile overall?
Well, obviously it hit everybody really hard. A lot of people were surprised up until the very end. And lots of money was lost up front. A lot of people panicked, which certainly I always encourage my clients, never panic, no knee-jerk reactions. In fact, we found that it did rebound. Now, what could that have in store going forward? Well, time will tell, but it's very vulnerable and volatile, and that's why one should be very active in what they're doing.
Are there a lot of bargain shoppers at different levels when something like this happens? Or are the savvy, are the sharks made for days like this?
I would say so. They're lingering out there, and they're trying to gobble up something and take advantage. And quite frankly, the average consumer, the average investor probably just doesn't have that awareness.
No, I sure wouldn't, but I assume that there are folks out there that are, and I hope that there's some of the people when I turn my portfolio over, I hope some of them are on my side, if you know what I mean. But I don't want that short-term kind of an attitude, or I don't want that approach to it. I want to be long-term in this. I want it to be conducive with what I want to get when I retire. Is that the way you counsel your clients? Because I really don't even look at my statements unless there's some particular reason at the end of the year for taxes.
Yeah, and I most definitely do. I work with a lot of those 55 and older, some at different phases of life. But again, you said key, long term. But that affects different people different ways, long term for the 30 or 40 or 50 compared to the 70. But the alternative is, as you mentioned, interest rates. They've been talking about raising those. I don't think they will because the Brexit, the Britain's exit has strengthened the dollar, as you mentioned. Quite frankly, I don't see them raising it, which there goes the returns at the bank, which is kind of the safety zone. Yeah,
it's a safety zone, but when I put something in the bank, I don't expect anything from that. I expect it just to hold serve and not lose money. You know, I don't know if many people put money in the bank thinking that, hey, this is going to be a great way for net gain.
They don't have that expectation, or they shouldn't have that expectation. What I found is some of the more mature clientele still think that there's high rates, but it's just not to be had.
You mentioned interest rates and mortgages and how that all relates. Do you think because of what happened in 2008, if we become a more sophisticated, a better served society, that we won't see it get away from us again, even when interest rates get low?
I wish I had more confidence in that. There's a lot to be determined, especially with what's going on, but I'm always optimistic.
Yeah, I guess that's all you can be. And as you know, when you look at a balanced portfolio, a part of it probably is real estate at some juncture. Are you bullish on that to a degree?
With some clients, yes, but the majority of clients that are in that retirement zone, bullish and bearish are the topics that come up. And how bullish can you be at 65 years old?
Yeah, it depends on where you're at in life. If you want to see some appreciation, the one thing about when you buy real estate, as I've learned, you do pay until you sell. You pay taxes. You pay if there's depending on where it's zoned. They may do an upgrade. They may blacktop your road. They may do things like that. And so you do pay. There's a cash flow that goes out of there negative until you sell. So it's not as if, as when I bought it, you're thinking, well, if I pay $10,000 and I sell it for $40,000, there's a $30,000 gain. It's more sophisticated than that.
That's very accurate. If it was only that easy.
If it was only that easy, and well, we try. So if you have clients come in right now that are nervous, what do you tell them? Where do you put them in? Do you move stuff to a certain place?
Well, certainly if that fits what their goals and objectives are, meaning how soon are they going to need to access income? What is this money going to be used for? Is it long-term money? Is it liquid money? Short-term goals and needs? It all depends, and that's part of our process and what the need is.
What's the most common question that you get today versus maybe 5 or 10 years ago?
Do I have enough to retire, and will my money last?
And that's scary stuff, so no matter how much money you have, isn't it?
Very scary. We're talking about their longevity, how long they'll last, and will they have enough income to sustain?
And when you put them down that road, the one thing that's always scared me is to literally be on a fixed income, forget what the number is, because it tells me that's it. That's all I can spend. That's whatever. I hate that feeling because it inhibits me. Do you try to create some options where there's some money coming in, or you can lift the ceiling so that you don't feel like you just have to succumb to whatever it is that is coming your way in the form of a pension or Social Security check?
Certainly, it all depends. That's why it's so important to have the plan. Now, it depends if you're talking to the 60 or the ones that are coming straight out of college that are having student loans and they don't even have any excess money. That's the next dilemma that, quite frankly, which is a new law at the beginning of the year as far as monies go and paying back loans. But it all depends on who the clientele that's coming in.
Families this time of year, and it makes sense in the summertime, they spend more money than any other time of the year because I guess if you're in a private school, it might be different. But if you're in a public school, the summer months are when you do your fun stuff. And the estimate was about $1,000 a kid just to keep them busy with camps and activities in the summertime. You need to budget for that, depending on how many kids, for sure. But you need to budget for that because they've got this energy that's not going away, and you got to find a way to fulfill it.
As a family with 4 daughters between 10 and 15, and maybe
bingo.
I know when it's summertime because the wallet's lighter. Because as you said, about $1,000 every summer goes into each child. More money spent in the summer than around holidays, and quite frankly, it comes down to the sun and the fun, and we want our kids to be busy and sports and all those things. So it really hurts. So there's got to be a plan and there's got to be a budget for it.
I saw the study recently, and I wish I could quote it chapter and verse, but it was something like 53 or 63. It might even been higher than that percent of people don't have a rainy day fund, and if there's a bill beyond $500, they're in trouble that they're not ready for, that they haven't budgeted for pre-existing going into. Why does that happen? Well, why do people in general, it's human nature that you spend to the max, that you take your budget to the max, as you study different people, and obviously you have to know this if you're going to manage money. Is that our nature, that we're going to push it as far as we can?
Well, there's certainly a distinct difference between those that are the baby boomers and above compared to the younger generation, which I could tend to put myself in, but not anymore. But there's a distinct difference because of costs, expectation, enabling, all these things, not to be excuses, but at the end of the day, what's left over, and have you prioritized it? Have you set aside the savings, all that? Well, the younger generation's just not as good at it, or costs are that much more.
Well, why, though, is discipline so difficult to come by financially? I mean, I've seen some startling statistics lately about how close people are to a disaster if things don't, fall in their direction, or if anything out of the ordinary comes up. In general, when you look at the psyche of folks, why is discipline such a tough one to engage in?
Because I think the younger generation, not to blame, but has enabled the younger ones to play. And if there's time, let's work. And quite frankly, I grew up work. If there was time, let's play. It's just a shift. Like it or not, there has to be a discipline from the family down. And I just don't see that discipline. I see it with the baby boomers and the elder generation that actually have retirement savings.
Which one is more accountable for the way people manage their finances, their parents marketing of Wall Street and the way they market to us, whether we realize it or not, on the billboard, on the radio, on TV, or the peer group that you're in and trying to keep up with the Joneses?
Well, the younger generation is keeping up with the Joneses. The older generation, they're the ones more responsible. They're the ones that actually put away and developed wealth on CDs that paid 15 to 17% or something of that nature. The markets were different. The buy and hold strategy was actually something that was relevant that we could argue today that maybe is or isn't. So that older generation's been more accountable and they've been more disciplined.
And can we get the younger generation? I mean, we can't, not all of them are, some of them are done with college now. How do we offer a class? How do we teach them? How do we reconvene? Because this affects us all if they're not prudent with their finances.
Yeah, and there's many economists who say we have an epidemic up ahead, which I hope we don't. But the student debt thing, as I mentioned, the student loans, that's a huge one, and they're starting right out of the gate, having a hard time finding jobs. So there's got to be more education as far as the financial piece, which at Haven Financial Group, that's what we specialize in, if you will, is education. But it starts with the education piece.
Larry, appreciate it much. Have a great 4th of July.
Same to you. Happy 4th.
You bet. Larry Kalovic from Haven Financial Group with some tips.